You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose, and for about 30 years, I've been a professional trader at some of the world's biggest exchanges. Now, my mission is to help folks like you learn to trade this gnarly volatility going on in the market right now. So I get on here every day the market's open, 11 a.m. Eastern time, go over the market, share some thoughts. Once in a while, we'll even share our trade of the day. Last Monday, we shared a whole bunch of trades with you guys because I wanted to help deal with this volatility. We always say in trading, in investing, traders investing, you could bet on a stock going higher, like Microsoft. You can bet on Microsoft going higher, or you can bet on Microsoft going lower. Long-term investors really are only buying stock. But not only can you bet on the direction, you could also bet on how much movement there is, how much uncertainty there is. And in the chat, I'm going to give a little shout out because Jeff in the chat says it best. Strangles are a great way to play volatility. And a strangle, instead of just buying Microsoft's trading at what, 380 or whatever it's trading at. If you're going to do a strangle, you could buy a call at 380 and you buy a put at 380, and then you just want Microsoft to move, like really move in a crazy, crazy way. So those are really the best trades in this kind of environment. Those are what we're going to go over today. I want to go over some of the trades that we shared last week, go over volatility, and finally, we are walking into another earnings season. So we're going to talk about how we trade earnings. Let's go over to the slide deck. I have the questions up for anybody as well. Harry, Saul, Eddie, James, Navi, John, thank you all for joining. All right, here we go. Let's start here with a glockenspiel because I know that people are hurting, but traders take advantage of volatility. Traders need to be active in this kind of environment. So I'm going to start right here with a shout out for Jerry. I know people are struggling, but Jerry, being smart, just made over 500% playing for the downside in these markets. So when the market gets killed, he is protecting himself. Hedge, hedge, hedge. Jerry, really, really great trade. Okay, last week, I shared a whole bunch of trades with you. Andy is on here earlier. He said, I put $1,000 on the 4 options that you suggested last week in the Fixie put and the Fixie call, Nike call, Vail called. He sold the Fixie FXI for 500% profit. Overall, 50% profit on the 4 trades, 3 losers. That is pretty freaking good. So here is the exact trades that we shared last week. So Fixie. FXI, I'm going to pull it up. FXI, Fixie, I keep saying, FXI is an ETF out of China. And here's what it looks like. The first thing I mentioned about FXI is it's gappy. It gaps all over the place. Why does it gap all over the place? Like right here where my mouse is, it gaps because they're on the other side of the world than we are. So the trade idea is right here in front of you. And the trade idea was really, really straightforward. 60 cents and 70 cents. So buy 35 puts and buy the 36 calls. The puts is a bet for the market to go down. The calls is a bet for it to go up. But the coolest thing about these trades is it's $130 per one lot. You're risking $130 and you can't lose anything more than you're risking. So if I open this up right now, and if I pull up an options chain, which I'm doing right here, albeit a little slowly. And so right here, let's pull up FXI. And let's see. Now the writing is going to be a little bit small. But I want you to see FXI April 15 days. When we did the trade, remember we did the 35 puts were only 60 cents, right? So it's $60 per one lot. Right now, those 35 puts are trading $4. So literally, if you put that trade on at $1.30 last week, you could take it off the 35 puts for $4. And this is how you can risk a little bit. I think the title of today's email was Risking Pennies to Make Dollars. This is how you can risk pennies to make dollars. You have $130 of risk. This next slide hopefully will show you a little bit better. Because actually, we did like this. Because the bet is for fixie. This is what we showed on Monday. Here's the range. If you think FXI could break out of this range, then that trade makes sense for you. But the reason this trade ended up making so much sense is because, for one, fixie got its butt whooped, right? But the trade makes so much sense because when China gets its butt whooped, our long-term portfolios are taking a hit. So this trade is a hedge on your long-term portfolio. So it just makes a lot of sense. I want to stop. Does that make sense, guys, of why we would do a trade like that, where you're betting on both sides? Because in your long-term portfolio, you already have that long exposure. So when trades like this present, they're a bit of a no-brainer trade. And that's the advantage to trading. Long-term investors don't have the ability to roll up their sleeves and make quick changes like this. And so that's why traders can make small bets, and then if the market moves a whole bunch, can end up making 300%, 400% on a trade like this. Here are some real outcomes that we just took from our Discord. Guys, some of you in here, who took the fixie trade? Who took advantage of this fixie trade? If you could just drop it in the chat. I don't want you guys to think that I'm just cherry picking, and you guys can go back to watch the original video of that FXI that we took last week. So good, John, Andy, Harry, Saul, nice trades in fixie. What else have we been doing in the Discord? Heck here, making some money. The bottom line, guys, is traders, Jeff was in fixie as well, traders want to be active in this kind of environment. What trades don't we want to do? Selling naked options. Selling naked options. Did anybody learn a hard lesson in this environment, selling naked options? What does that mean when we sell a naked option? Let's pull up a stock. Let's pull up Tesla. Now realize, when it comes to options on the internet, most people are teaching how to sell options. We don't sell naked options. We do the opposite. We do what everybody is afraid to do, and we look to buy options and play for long volatility. So I want to pull up Tesla, because these are the really dangerous trades in the market that I want you to avoid. Have some of you guys, naked means unlimited risk. Ron, that's exactly correct. Let's stop here and do an example, because this is really, really, really important. Okay, now I'm going to go right here. And so let's say a stock Let's say a stock's at 15. Now, if you think the stock's going to go higher, the 17 calls, maybe they're trading for 50 cents. You could buy those. It's $50 of risk. And then you're long from 17. You can never lose more than you bet. Now, on the downside, let's say the puts are trading at 13 and you want to get long. So you want to sell puts and you want to take in income or do a cash secured put. Well, if these puts are just trading for a dime, you could bet that they stay above 13s. You could sell them. If the stock closed at 15, you get to keep your $10. The problem is in this environment, if that stock goes to 5, well, right now you're losing $8 here. So you're going to lose $7.90 because you took in a dime. So in this example, selling puts, you're trying to make $10 and you're risking $790. It's death. We don't sell naked options. Be very, 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 very careful trading options for an income strategy, because what ends up happening, Tesla's trading 231. The odds, what do you guys think? How about this? In 10 days, Tesla's trading 231. What's the odds of Tesla trading 150 in 10 days? What do you think? What do you guys think? 10% chance? 30% chance? 0% chance? Here's my question for all of you. I'd love you guys to participate, please. Tesla's trading 230. What are the odds of Tesla trading 150 in 10 days from now? Less than 10%. Less than 5%. Slim. Watch. Customize. Even if you don't have a comfort with options, I want you to use this trick. It's really, really important. Eddie's saying 1%, Giuseppe's saying 0%, Ron 10%. The delta, good question. So watch. I'm going to put the delta up. The delta of the 150 puts is 0.05. The market is pricing in a 5% likelihood that Tesla could trade down to $150 within 10 days. That's just math. Let me say that again. The market is pricing in a 5% likelihood that Tesla trades down to 150 in the next 10 days. And you can see that by the delta. If the odds were 0, you could just sell these and collect $165 per one lot. But it's not. 95% chance it won't. 5% chance it will. And you could learn that from the delta. In this kind of environment, the VIX is so freaking high that this market can go to places where you don't believe they have a likelihood to go. And so that's why I'm showing you this. This is absolutely in one of the likelihoods that could possibly happen. So really, really important to make sure that, for one, you don't have any tail risk. You don't have any of that. You're not just selling vol and crossing your fingers. If anything, we want a fixed amount of risk in this environment. I want to move on now to earnings. Thanks, Matt. Very, very important. We are walking into earnings season right now. Awesome. We are walking into the beginning of earnings season. The way that we trade earnings at Masters in Trading is the exact same approach that we've been using since 2015. I was a market maker in 2011, 2012. This is exactly how I learned how to trade earnings when I was on the floor of the Chicago Board Options Exchange. John is saying, I'll never sell naked options. John, is that because you learned that lesson the hard way? Most people have learned that lesson the hard way. I would be very, very careful selling naked options. Our Earnings Advantage program. We have an earnings program where I share a whole bunch of trades every single earnings season. We are now getting into earnings season again. In this environment, the best trades that you can do are straddles and strangles. That's exactly what we do in earnings, and I am very excited to boast about these real returns because so far we've had the Earnings Academy for 9 months. We have 26 closed trades. The average position hold time is 36 and a half days. Earnings portfolio win rate, 65%. Average position gain, darn close to 50%. Annualized gain, 481% because these trades only have a 36-day hold. So I wanted to leave this here. I'm going to switch off to our all access, but there's going to be a number on the screen. We got a little promotion going for our new Earnings Advantage trades that will be coming out this week. Let me jump on live. If you're interested in learning more about the earnings program, I'm going to switch over to all access. I got a cool all access trade for you guys. If you want to learn more, there's going to be a number on your screen. Give it a call. We got a promotion. These earnings are the best trades that we offer, and now is the optimal time for these earnings trades. All right, all access. You guys don't go anywhere.